Hey everybody, this is Jim at SP500chart.com. It is 4:30 here on the East Coast. We're going to look at the S&P chart. Nothing really momentous took place today, but we're going to look at it just the same after I read this to you. And what I have to read you is the disclaimer that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research. And you should be making investment decisions that are suitable for your personal financial situation. I can't stress that enough. And also cannot stress enough that I am not a licensed financial professional. I'm just a guy who draws lines on charts. So here's our 30-minute chart. We ended the day almost exactly in the middle of our newly refined or redefined rising channel between these two red lines right here and right here. We have also identified a triangle pattern that looks like it's wanting to serve as a consolidation. But this is where things get very interesting. This triangle, by the way, has a projected target. By the way, I've got some new subscribers today, so I'm assuming that you probably have looked at some of my videos and that's why you decided to sign on. But just in case that's not the case, the way we measure targets from patterns, from consolidations, is we measure the height of that pattern, in which I've done right here with this line. Then we add that onto the point where the breakout took place. And in this case, this pattern broke out to the upside, and that gives us a target of roughly 1530. But what's interesting is, in order to make that target in a what I would consider a typical time frame, which should be, since this pattern is only about 2 weeks long, you should make that within 2 weeks. I mean, that's not a hard fast rule, but certainly it seems that the scale of the pattern in time should also be reflected in how quickly the target is met. And typically, breakouts from consolidations can make their target in the breakout move. So it's not that unusual. It wouldn't have been that unusual for us to wake up on the 8th and see that, wow, the S&P powered up from 1510 to 1530, a 20-point day. That would not have been that unusual. But we got one thing that I think is running interference here, and this is this brown line. If we go to a daily chart, you can see that the brown line has two touches on two fairly major intermediate tops. Each one of these tops, by the way, we thankfully were able to call. Now, these weren't verified until they broke down. You could see there's the breakdown here, there's the breakdown here. If we back up to a 2-day chart, we also see that this line extends to a top that took place in fairly early 2010. That would have been in the spring of 2010. On two occasions in 2011, you might pick a bone with my terminology on two occasions, but let's just suffice it to say that in 2011 the S&P got up over this brown line. But you can see that while the market ran up over the brown line here, it also ran under it later in the year. So sometimes it's almost as if the markets are set up like a pendulum or a spring. And that is, if you stress it more in one direction, then the reactive move may be more in the opposite direction. And why would that be? Well, it would be simply because while every other thing that's taken place in this between these two lines has been confined nicely by this resistance line and this support line, we had excess buying over here that took the S&P up over this resistance line. That excess buying meant there was more shares on the long side than what was typical throughout the past 3.5 years. So therefore, when things start to go south, there's more shares that get sold. There's more shares that are in the market. Therefore, there's more selling pressure on the other side of that. Then it looks like we've kind of restabilized into the same pattern. So going forward, tomorrow, what we have to look at again is this brown line going to exert resistance on this market, or is the S&P going to have one of those spells, if you will, where it is able to create more buying pressure adequate to get up over this brown line, perhaps similar to what took place in 2011. Now you can see that the scale of these moves has been decreasing all throughout the past 3.5 years, as evidenced here, especially in the past year. We've really been seeing much smaller movements. We've been seeing smaller time frames. Everything is kind of getting shrunken down. And when do we see that? Well, we often see that at the end of moves. And when I'm talking about moves here, I'm not talking about what took place last week. I'm talking about what's taken place over the past 4 years. So we're not quite 4 years into this huge rally off of that March 9, 2009 low. But we're getting close. So we're getting close to 4 years. And that would be about the average lifespan of a bull cycle in the modern era. So I think we've just got to watch this really, really carefully. So again, here's the conflict. We've got a long-term brown resistance line that is penetrable, as evidenced by 2011. And we have a target of about 1530 based upon the trading that took place in between these 4 blue lines. So, you know, that's what can I say other than that? We're seeing if this market has the ability to get up to 1530 over this brown line, and if it does, we still need to be watching this red channel, because when that breaks, that is likely, and I've said this before and been wrong, but that's likely the shot across the bow that tells us this nice move up that has lasted all of 2013 so far will likely start to turn the tide downward when we break this blue line, this red line that I'm highlighting right now. Now we would expect some support here at this yellow line if we get there, if that's what we see happening. This yellow line goes back to the last 2 fairly prominent bottoms. Okay, so guys, let's just keep an eye on this. And as a matter of fact, you know, we could even take this red line and extend it back here. So it almost looks as if we're in a wider channel, but we're hugging this top line for all of 2013. So guys, that's the video for February 13th, 2013. If you have a significant other, wish them a happy Valentine's Day tomorrow. And I really want to thank you for your time today and for your support. Take care.